Hello, everyone. My guest today is Andre Durand. He is building a company called Ping Identity. If you haven't heard of it before, again, really playing in the basically simplifying how enterprises secure their digital experiences in a seamless way. Andre, you ready to take us to the top?
I am. Thank you.
You bet. So listen, you came on, gosh, it must have been, I would say about a year and a half now at this point. You were growing nicely. The Vista deal had obviously already happened at that point. I assume you're still Vista owned unless you raised a gob amount of capital and took it private, right?
That's correct.
Okay, very good. So for those people that are not familiar with the company, tell everyone what you guys do.
Yeah, so Ping Identity is, we provide the enterprise identity infrastructure for most of the big brands that you all probably engage with, but you'd never know it. So if you log into your bank, if you log in to buy tickets, if you're logging in to do X number of things online, you probably are logging into our software. And our software is storing your identity. It's encrypting the information and kind of keeping it safe for the enterprises that you are engaging with. And then behind the scenes, we're making the experience a lot better because we are eliminating a whole series of logins that might otherwise exist. You don't really see this. It's kind of invisible. So you log in once to a company, and not having to log in again as you move around and navigate those large enterprises, you don't really realize it, but a lot of times you're really kind of logging into a portal, and there's all these back-end systems that you're engaging with that would otherwise have to know your identity, and we are conveying that identity information to all the systems, all the way back to the mainframe. So it's really the infrastructure that people engage with.
Yep. Now, Andre, you launched this company, you told me last time you were on, back in 2002, correct?
That's right.
And one of the things that impressed me about kind of actually not impressed me, but also surprised me is you talked about how kind of your current customers, on average, you told me they're paying like, call it $80,000-$90,000 a year. Is that still basically accurate, or have you gone drastically up or downstream?
It's gone drastically upstream.
Really?
And yeah, as our portfolio of solutions has gotten larger, our enterprise customers have purchased more from us. And so, the average spend, if you will, on our large enterprises has been increasing drastically over the last couple of years.
Well, obviously, that's a healthy place to be, and that's a function of expansion revenue and the sales team and the onboarding and the activation and all that jazz. So would you say then, are we talking like average company now paying more like 150 grand a year instead of 90 grand a year? Or like how, have you doubled it, you think, or?
Yeah, I haven't seen that exact stat. We track companies that spend, say, over 100,000 with us. How many of those do we have? Companies that spend over 250, over $500,000, over $1 million. And all of those categories have increased, in the range of 30% to 80% year over year.
Okay.
In terms of the number of companies in each one of those higher tiers.
Yep. That's good. So, I'm trying to figure out, is what you're saying actually expansion revenue, no matter what the cohort is, has been about 30%?
No, I would say it's larger than that.
Okay.
But yeah.
And one of the things that you talked about that surprised me when we last spoke is I asked what your dollar-based CAC was. You said, Nathan, we're spending about $1.20 to get a new dollar of ARR at this point. And quite frankly, Nathan, we're thinking about increasing that drastically. And that surprised me because most people want to decrease CAC. So have you increased your dollar-based CAC? And if so, have the economics panned out how you hoped?
Yeah. Well, the goal wasn't per se to increase it.
Yeah.
When we switched to subscription and I started to get my eyes on this CAC number and really understand and appreciate it, we had a pretty high CAC, which was pretty unfavorable. Let's just say a 2-to-1 CAC. We would spend $2 in sales and marketing all in to get $1 of annual subscription. Now, the good thing is I've got a really long lifetime value with my enterprise customers, but still that wasn't a super favorable CAC. And over the course of a couple of years, just focusing on the efficiency of sales and marketing, we were able to bring that down to about what you were describing, about $1.20 that we would spend all in on sales and marketing to get $1 in subscription. And proving that we were able to do that and understanding what all the inputs were to a really efficient sales and marketing machine, we started to get a lot more sophisticated. Where can we spend, and what does the CAC to lifetime value equation to look like? So as we begin to understand the ratio of those two and the fact that we have very long lifetime values, became clear to us that we could spend a little bit more in sales and marketing. We could afford to allow our CAC to rise a little bit. But in the movie, the long-term picture, it was still an extremely favorable financial picture for the company.
Yeah. This is always a tricky math between payback period and LTV to CAC ratios, because LTV to CAC ratios don't take into account a time-based function. And sometimes if you don't have a bunch of money raised, you have to look at payback more than LTV to CAC because you have time issues. You got to survive for tomorrow. What I hear you saying is you have so much cohort data back to 2002, you can pretty accurately predict your lifetime values. And with that, confidence, you can increase your CAC a bit.
That's exactly correct. And the other thing is we're profitable.
Yeah, that's nice too. That's nice too, by the PS. We're profitable.
It's not like I'm consuming a finite set of capital with an expiration date. And then, so I've got to be really clear about what I'm spending in sales and marketing to get my subscription.
Yeah, you told me last time your gross churn, revenue churn annually was about 12%. Is that still about accurate? Well, I'm going to be a little careful here. Those sorts of numbers now we don't share. That's okay.
But nothing has substantially changed.
Yeah. I mean, the reason you're more than making up for it with the expansion revenue, right? By far. Yeah. Okay, good.
Net retention is also extremely favorable.
Well, yeah, I would argue, we all obviously saw the Zoom S1 and I've done about 1,000 of these interviews now. I would argue like world-class net revenue retention is called 140. And if you're at 12 gross and 40 expansion, that puts you at 128. You're doing a damn good job at expansion.
Yes.
How's that? Educate us there about that sales function. So you had, first off, what's team size today? How many folks?
Well, we're approaching 1,000 people overall.
Okay.
The company.
Why do you say it like that? Do you have a bunch of contractors or what?
No, were you asking about quota bearing folks?
Well, that's what I was going to. So total team size is 1,000. And then my next question was going to be, talk to me about your quota bearing kind of sales machine.
Yeah, we don't share those numbers, and
that's okay.
I'd love to hear it exactly how many quota bearing folks we have, but keep going, keep asking.
Well, yeah. So okay. So maybe what % of the total company is a sales and marketing function?
Boy, I'd like to be really accurate here, and I don't have a stat sheet.
That's okay. Well, I guess
our benchmarks for our size and scale are right in line with best industry benchmarks for what we're spending here. And as I said before, our CAC is healthy and we're profitable. So you know that we're kind of driving a high growth, profitable enterprise. There's nothing wacky in our numbers.
No. By the way, I'm not hunting for anything wacky. I think it's been a great story. And what I'm trying to do is actually pull little nuggets out for other people at this scale to basically do what you've done in different industries. Let me maybe ask a different question. So there's a lot of people that have different CEOs at your level that have different theses about what your essentially return per salesperson should be. And said more cleanly, if you're paying a salesperson $100,000 a year, right, all in, they want to see kind of a 10x performance on that in terms of quota attainment of $1 million. What general ratio are you setting up on your folks that are quota bearing in terms of the performance you want to see from them relative to the pay?
I'd actually never heard that stat, which is intriguing. But
Andre, you're killing me.
Your 10x is not off.
Okay.
Your 10x is not off.
Okay,
right?
That's interesting. Now, do you edit that over time as you go up or down? You're going up market, but does that change drastically as you change ACVs or no?
I would say where it changes is on your channel contribution and whether you're direct or channel. So we've been largely direct through our history. The channel is playing an increasing role in our go-to-market. And when you do it right, the channel-sourced business changes the quota and changes where your salespeople are focused. Meaning, are they focused on enabling their channel to both source deals and then sell deals? And if that's the case, then the quota increases as you become more channel driven. So I would say the big change, as you would imagine, every year quotas go up a little bit.
Yep.
Right? And so you could see a 5 to 10% appreciation in quota. But the big change, once you're at that 10x, say, as an example of cost to quota, the big change comes from, are you moving your business towards the channel? And as that naturally occurs, you want to see the quotas rise as a result of that.
There are some people, when you look at their quota revenue, it's higher margin than their direct model. And there's other people where the channel is actually worse. It all depends really on the kickback you're giving the channel, right? So do you directly incentivize whoever the channel agency, the partner is? Do you incentivize them with like a 30, 40% affiliate fee or kickback? And then you also have to put one of your salespeople on it to enable the channel?
Yeah, that's a really good point. You're describing what I'll call the messy middle, right? When you're all direct, it's really clean. And when you're all channel, it's really clean. And when you're in the middle, it's a little messy. And it's also a little bit more costly, right? Because you're investing in the channel and you're providing, the channel incentives, if that makes sense. But you're not necessarily seeing the quote of the salesperson rise fast enough to cover it. And so it does get more expensive when you're somewhere in the middle of either a all direct or all channel. And the truth is, to move from one model to the next, you have to expect to spend some cost and shall I say, be a little bit less efficient in that middle stage. So, for us, we went from a period of time where, go back maybe 3 years, we were maybe less than 15% of our business was channel influenced. Today, it's over 60%. Right about 60%. So a huge increase in the amount of business.
Did you say channel influence, or no? 60% of your new customers are coming from the channel.
Yeah. So we track two things: channel influenced, and we also track channel sourced. So we began with channel influenced, right? And so that could be the channel may not have sourced the deal, but is very influential, maybe in helping us close the deal, as an example, and we bring them in during the course of the deal. Channel sourced is obviously a smaller piece of that number. The real acid test is how much of your business is channel sourced. These are deals that our salespeople didn't see that the channel did see, and brought the prospect to us, and they saw they saw the project in the RFP before we did, and that also has appreciated nicely within our business. We're not disclosing that, but that is a subset of the 60% of our business is now sourced directly by the channel.
Okay,
and then our salespeople are co-selling with them.
Let me make sure I understand that. So if we talk again in a year and we look at your total, inbound, the new revenue over the next 12 months, what you're saying is some 20, 30, 40% of that will come from channel, and then there's an overlap where maybe 20, 30% of new revenue will be influenced by the channel, but not sourced by the channel. Then the rest will all be direct, right? You call it 60, 70%.
That's exactly right.
Interesting. Very interesting. I mean, that's such an interesting thing to measure. How the hell do you measure if something was influenced by a channel?
Yeah. Well, we see it we obviously track in Salesforce all the various touch points. We know when a channel partner is involved. In some cases, we will introduce a channel partner at some point in the sales cycle that has expertise to help us implement the deployment, if that makes sense.
Do they take on that professional services kind of worse margin revenue, or do you handle that directly yourself?
We love a model, so we certainly have a professional services organization, but I would call it a strategic arm of our enterprise. We're a product company. We're not a services company. And so we try to bring in partners everywhere we can where there's deployment services involved. We have some what I'll call strategic wherewithal, a ProServe group that can handle deals that are either really complicated or under really tight timelines, or might involve new technology that we don't have a channel partner fully up to speed on. But we do kind of constrain the size of our professional organization to be a strategic arm and not a massive revenue arm for the company. Yep. We want that business to go to the channel.
Yeah. I mean, let me ask you this question. And I don't know if you've actually done the split out. If you look at your current customers today that are paying you, that paid some amount of money on a professional services fee with you guys, and then compare that to people that you haven't done no professional services for that are customers, I imagine your expansion, retention, all the economics are going to look way healthier on the ones that you touched with professional services versus not. Would you agree with that?
There is some correlation. There is absolutely some correlation. The last thing we want is a customer who unsuccessfully deploys our technology, right? That's future churn risk. And so we're very conscious about making sure that we have a partner involved or some sort of deployment services. We call it attached services.
Okay.
It's a license of our technology, because we have absolutely noticed a correlation of either our services or partner services to facilitate in the deployment, in how fast the deployment happens, and then subsequently to make sure that there's no shelfware that we sold them a year later.
Yep. No, that all makes good sense. Yep. That all makes good sense. And then help me understand. I mean, so you're going through all kinds of changes. Obviously, you were yourself, and then Vista. You raised 123 before the Vista acquisition, right?
Correct.
Yes. I mean, you've gone through the full life cycle of this bad boy. How many customers are you serving now today?
Well, we're over 1,000 customers.
Okay.
And, we really track the big ones,
Yep.
as you would imagine. They're all important, but we really pride ourselves in some of the scale of the installations that we have. So we say we're in over 50% of the Fortune 100. But if you look at the scale of some of these, I mean, we have customers who have some of the largest customers, as you would imagine, some of the largest brands you would think about, they have over 1 million employees.
Yep.
Well over 1 million employees. We have customers who have deployed our technology in a customer consumer facing scenario with well over 100 million customers. So our technology is securing the identity of well over 100 million end users at a single customer.
Yep. No, it all makes, I asked because, I mean, last time you were on, you said you had about 1,500. So it sounds like you're holding back a little more numbers this time, which is totally fine. It makes sense why you do that. But again, it sounds like you're really driving deeper deployments into the customer base you already had, which is where that expansion revenue comes from. And you can drive nice growth from that.
It's been a big theme, right? How deep are you in an enterprise and how strategic are you? And it was one thing when we had one solution and we were within the enterprise, say on the workforce side or the customer side. It's another thing when you're providing the entire identity stack, if you will, or infrastructure for the entire enterprise, meaning their entire workforce and all of their customers and consumers.
Yeah.
You're really providing a lot of value to enterprises in that case. And so we have had a big push as our portfolio has matured to really go deep with these large enterprises. It doesn't mean that we're not focused on new customers, new logos. We absolutely are. We're targeting a lot of our cloud offerings into the new customers, and we're targeting our expanded portfolio into our large enterprise customers.
Yeah. What year, or maybe you think it might be this year? I mean, would it be a stretch goal? I mean, well, actually, let me not ask that question. Do you see $300 million of AR like as a reasonable goal this year, or is that a really uncomfortable goal or a stretch goal?
Well, again, without sharing numbers, let's just say my goals in the foreseeable future exceed that.
Yeah.
Now, foreseeable, I'm not going to say like that's this calendar year, but we certainly are making plans now for scale above and beyond that number.
Yeah, I mean, it's funny. I've interviewed a bunch of Vista CEOs at this point. So I had Reggie on. He's fun. He's talking about we're about to hit $600 million in ARR, and then I get the Numerator crew on and Bill Wise on and all these guys, and I go like, why the hell do these people keep operating inside of Vista after like Vista made them really rich? And my only conclusion is they've got to be pushing you to set bigger and bigger goals that just really turn you on. Otherwise, you'd quit and go sit on a yacht somewhere and then do that for 6 months and launch your own company again.
I get asked this question a lot. Vista's been a really great company to work with. Really a great investment partner, wholly supportive of Reggie and myself and other Vista CEOs that are in the portfolio who I speak with on a regular basis. And so we obviously, many of us are founders. Yep. We're very passionate about our space. We're very passionate about our companies. In some sense, it's a chapter in the journey of the development and evolution of our companies where we go through a PE stage. And I feel very fortunate that we landed one of the best PEs ever, certainly for enterprise software. And because of the support that they've given us, helping us grow our businesses and supporting us as CEOs, I think that's why you see us continuing.
Yep. No, are they, they've just raised a massive, obviously, another round, and that can be a dangerous thing. To deploy $14 billion at their IRRs they've historically had means there's got to be some downward pressure on some of their bigger portfolio companies like you, Reggie, et cetera, to do some roll-ups. So Reggie did social tables. You've got some other stuff coming down the pipe. I mean, how are you thinking about M&A right now?
It's a part of the Vista strategy, for sure. When they have a larger company that has achieved scale, that they would say is a platform, if you will, within our industry or our vertical, to accelerate growth through inorganic acquisition. And they obviously do have a war chest.
Yep.
They also have a lot of expertise in how to execute and how to filter the options. And they really keep track of the number of companies kind of at the startup stage and growing up into those, early, very interesting technologies and companies that could be added to their platform companies. And there is a tremendous amount of growth and almost an explosion that we've all been tracking in terms of the technologies that can be added to our various platforms. So I would say that it's textbook formula, frankly, to leverage that war chest and their expertise to grow faster inorganically.
So when are you acquiring Jumio?
We certainly have we maintain a list.
Andre, you could barely say that with a straight face. Holy shit. No, I remember seeing those guys and I remember going, oh, this seems like this is what Andre is doing. These are both fairly successful companies. This is interesting. Something's going to happen here.
There's a lot going on in identity right now. I'm going to tell you, it touches everything. I mean, the good and bad of it is it touches everything. And even within, just call it the confines of identity, it's pretty broad. I mean, there's a good 4 or 5, depending on how you look at it, 4 or 5 pretty major segments of just the identity landscape.
No, Andre, by the way, I see this actually as a national security issue. I mean, I'll tell you, let's be really extreme for a second. And this is my best pitch for how you could be $100 billion company, right? A company like Twitter, if you really believe Russia's interfering with fake accounts, you install a company like you or Jumio to make sure that driver's license are attached to every single Twitter account. That is how you get bots out of the system. I mean, so if this trend continues, your businesses have to grow with that.
Hey, everything's going to be identified, right? And we need higher and higher assurance of identification. You just described an assurance of call it what I call proofing in our industry. You want to prove your identity from some reputable source, like a government issued document, assuming the government did a good job vetting identity, right? It's all got to make sure it's not built on a house of cards. And then once you have all of that, you build these digital accounts. The digital accounts, the digital identity infrastructure is managing these accounts needs to be really fortified, and frankly, it needs to be really sophisticated. Because at the end of the day, every conversation digitally begins with who are you, prove it, and what are you authorized to do? And based upon that, then we're able to go anywhere, do anything, make it seamless, but keep it really secure. Turns out we're connecting everything to everything. That's ultimately the goal. We're connecting everything to everything, and we're trying to keep it secure. So it just is a massively deep space.
Guys, on that note, Andre, let's wrap up with the famous 5. Number 1, favorite business book.
Favorite business book is Good to Great.
Number 2, is there a CEO you're following or studying?
Well, I have learned a lot from my fellow Vista CEOs. I'm not going to call one out because there's 3 or 4. Reggie, I'm going to say, is included in that list.
He's great. All right, number 3, what's your favorite online tool for building your company?
Favorite online tool? Boy, I got to tell you, it's still PowerPoint.
Yeah.
I've got to convey ideas, and I'm a visual thinker.
Number 4, how many hours of sleep you get every night?
7.
That's good. And situation, married, single, kids?
Married, 2 little girls, 14 and 16.
Oh, amazing. And Andre, remind me how old you are.
I am 51.
51. Last question. What do you wish your 20-year-old self knew?
A very, very deep question. I would say that the way people tell you the world works and the way the world really works are 2 different things. And really, at the end of the day, I'm describing wisdom. And once you appreciate wisdom, you listen better.
Guys, there you have it. Ping Identity, Andre Durand, scaling nicely, Vista owned, 128 million raised, but obviously prior to that, but now scaling nicely with their expansion revenue into their enterprise cohorts, north of 1,000 enterprise customers with ACVs north, call it, $80, $90, $100,000 per year. 1,000 people or so on the team as they build their channel partnership model out and scaling, again, focusing on how do they connect really everything with everything in their identity management platform. Andre, thanks for taking us to the top.
Thank you, Nathan.